Welcome to the Access CPA channel. My name is Charlene. Today I want to share with you the biggest and most common mistake that people make when they report their rental activities on their tax return. So whether you are an investor or you are just an individual owning multiple rental properties, you will want to pay attention to this video. So please stay tuned. So one of the biggest incentives or the greatest benefit of owning a rental property is the ability to deduct depreciation expenses. Why is that attractive? Because depreciation expenses are essentially non-cash expenses, meaning you don't have to spend money in order to be eligible to deduct depreciation charges. However, there are many scenarios that we have seen business owners or rental property owners forgot to deduct this depreciation, or these depreciation charges are not calculated and deducted in a correct way. So in this video, I would explain at length what is the proper method to use to deduct depreciation expenses. So in order to deduct depreciation, the very first important thing is that you need to know what is the cost of purchase of your rental property. Now, in order to make sure that you have the correct cost basis, you really have to split the cost of your purchase into two portions. One is the land and one is the building. So usually you would get the percentage of the breakdown by visiting the county appraisal website. You know, if you go to county appraisal website, for example, if you're from Houston, you would go to HCAT website and then you would look up for the property address, and once you have that, you are able to access the records, and usually the records would show you a breakdown. So this scenario, I'll give you an example. The market value of this particular property, particular rental property is $600K, and 60% of it, you know, is the value of the land, and 40% is the value of the building. So once you have to break down what is the correct way to allocate and depreciate your rental property, you would have to take the cost of your property and break it down to the equivalent percentage. In this case, the cost of purchase for this client is $300,000. 60% will be allocated to land and 40% will be allocated to building. Therefore, $180K is for land and 40%, which is $120K, is for building. Now, land is not depreciable, but it is important that you report land costs when you file your tax return, because ultimately it is your cost basis. Your cost basis is important for you to minimize your capital gain. So the day that you sell your property, you would be able to take your proceeds and you minus your cost basis, and the difference would be your capital gain. Therefore, keeping track of your cost basis, whether it be land or building, is equally important. Now, next, we're going to talk about depreciation for building. So if you have a home, you know, you need to understand the purpose of this building. Like if it's residential, then you depreciate across 27.5 years. Now, if it is commercial, you depreciate across 39 years. So this is a short video, and I hope that you find this video to be beneficial. You know, honestly, over the years, I've seen a lot of people who use TurboTax, or, you know, who actually do taxes themselves. They forgot to claim depreciation, or I have even seen scenarios that depreciation expenses are not being claimed correctly and it's not calculated correctly. And it directly affects how you would report, you know, your rental income, your expenses, and your profit from running the rental activities. And it will also impact, ultimately, when you sell the property, what should be the correct capital gain. So if you need any help, if you have any questions about rental properties, if you're new in managing or starting the rental business, we welcome you to reach out to us. You can always call us. Our number is 832-295-3353, and we would love to speak with you. If you want to support this channel, we very much appreciate it if you like, share, and hit the bell notification. And we'll see you next time. Thank you. Goodbye.